Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 19th of October and we have our regular Thursday guest, David Kuo, founder of the Smart Investor out of Singapore. David, it's always great to have you on the show.
Selamat tengah hari, Brian.
Now, it's a tengah hari, but not so selamat for Malaysia, as we'll find out later in the show. But David, before we get your insights, let's take a look and see what the market numbers look like across the region. And unfortunately, it's down day Thursday as usual. We start with the SGX, which is down 1.14%. Bursa Malaysia is down 0.13%. Shanghai is down 1.21%. The ASX All Ordinaries is down 1.4%. The Nikkei is down 1.6%. The Hang Seng is down 2.36%. And rounding up the numbers, we have the Kospi, which is also down 1.82%. Now, David, tell us the reason for the sea of red.
Full house today, Brian. Full house. even Malaysia. Yeah, I mean, even Malaysia, which is just on the cusp of actually being green rather than red. Yeah, it's all about America at the moment. It's all about interest rates. The American economy looks as though it's going to be stronger, given the latest economic data. And of course, people are talking about have interest rates now peaked, or could they go higher? We'll probably find out some clues later on today when Jerome Powell starts to speak. But other than that, I think it's pretty much risk off. We saw the Dow close about 330 points down last night, which is kind of an indication that despite some good results from corporations in America, people are saying that we've got too many things to worry about. The conflict over in the Middle East at the moment. We've also got interest rates to worry about. And as a result of that, they're saying, let's just take our money off the table, both in terms of bonds and also stocks. So let's just sell those and sit on cash at the moment, Brian.
So, David, but interesting enough, earnings season, pretty good. Netflix, Tesla, US banks, Procter Gamble.
Well, Tesla not so great. Yeah, Netflix good. I mean, Netflix has increased its subscriber numbers. It's been able to push through, presumably the password sharing phenomenon that's been going on for a while. And so some people are saying, I do really want Netflix, and I am willing to pay for Netflix. So their subscriber numbers were up, and they're even talking about the possibility of increasing the remit as far as password sharing is concerned. Tesla, on the other hand, not so great. By the way, Brian, here's a question for you. Do you know how many electric vehicle makers there are in China?
There's probably a triple digit number.
It is triple digit. It used to be about 500, but it's actually now about 100 electric vehicle makers. And it just goes to show that a lot of people talk about EVs, but in actual fact, if you and I put our minds together and maybe put our money together, we could probably start an EV maker over in Malaysia without a great deal of difficulty.
David, here's the dirty secret.
Yeah.
Just go to Bosch and they can put a car together for you overnight.
I totally agree with you. I was going to say, you are probably old enough to remember the days when we had Skeletrix, yeah? And we had this track, and we all had a little car, and we could actually do all sorts of things to the car. All we needed was a motor and the thing that actually controlled the speed of the car. And that really is all EV is about. I mean, people talk about EVs as though it's some kind of, oh my goodness, this is something new here. It's just an electric car. And so you and I could actually sort of put an EV together without a great deal of difficulty, buy a motor. You can do the design because you're probably better at designs than I am. And we could actually end up with an electric car, and we could call it something, I don't know, maybe the Tony Kuo car or something, and then we could have whatever we wanted, anything we wanted, anything that we can even think of. We could actually sort of create a car. So it goes to show that as far as Tesla is concerned, they're going to be having a lot of difficulty in maintaining their top spot as an electric vehicle maker. I don't think first mover advantage is going to play a great deal as far as electric cars are concerned, Brian.
Okay, David, I think perhaps first mover advantage doesn't play a big deal outside of the US, but in the US, they have a trump card. They have the charging networks and the large manufacturers now realize they have to work with Tesla. And that's a different business model altogether. That also is interesting because from a technical standpoint, so here's the different level of data that Tesla has. Now, when you connect to a car, so GM is part of Tesla's network. When you connect to a GM car to the Tesla charging station, you need to do what is known as a handshake. So you need to identify which is the car. Have you subscribed to the service, for example, right? Guess who has all that data now?
Tesla.
Absolutely. And so
So are you saying, so are you saying that the Chinese electric vehicle makers, the EV makers from China, have no chance of breaking into the American market?
No, not that. They will sell a lot, but if they have to use that charging infrastructure,
right,
that's a Tesla proprietary charging infrastructure. Of course, there are people who are like Shell and all that who are rolling out charging stations of their own, and they don't have to use that. But the reality is, there is a reason why Ford and General Motors are using Tesla's infrastructure. So, and that's a really interesting thing.
So are we valuing Tesla wrongly? Should we be valuing Tesla more as a utility rather than an electric vehicle maker?
So here's the thing. Tesla can be valued, I think, in many different ways. It has a utility value. It has, remember, battery making capabilities, which they then can later resell because they have capacity. The third thing is, of course, as a car maker, and they also have proprietary technologies around manufacturing, which is very interesting. So it's, and I said earlier in the show around, you and I can go to Bosch. Bosch has all the pieces of the puzzle to go build a car. And I know this because I've interviewed people from Bosch before on BizTech Asia. So you can do that, but for you to get to that next level of efficiency, watch out for people like Toyota and Tesla and stuff like that. I think, and BYD, they may have proprietary manufacturing and competitive advantages that the others don't have. This is a much more complex thing than we realize, and that's where my thinking around Tesla has changed.
Yeah, I've always thought of Tesla as being, they were one of the first onto the market, but certainly the others are catching up with great speed at the moment. And some people might say the Tesla design is very advanced, but other people can do something very similar. And when I think about 100 EV makers over in China, I just think it can't really be that difficult to actually be an EV maker. Yeah.
And David, you know what? The Chinese are going to, they are now the #1 exporters in the world now. They've overtaken Japan. So that's the Chinese EV combined. It's the future. There will be a few winners. If you look back historically in the car business, even in the 1920s and so forth, you had hundreds of car makers. And then eventually there was consolidation in the industry. And then you had General Motors, Ford, and Chrysler. So I think history is quite a good predictor in this case as well.
I think there is a lesson to be learned there, yeah. So don't get too excited about EV makers.
Now, David, on a different note, this is October. And for all of us who are old enough, we often get a little nervous around October because of a Black October that happened, a couple of decades ago. There's a lot of negativity out there at the moment. There's a lot of bad news. What are your thoughts on the likelihood of something happening this year?
Well, the thing is, some people are putting 1 and 1 together and ending up with 3 rather than 2. And I just think, we've had Black October, we've had Black Tuesday, I think, Black Thursday, and some of the worst financial disasters tend to happen in October, including, of course, the great financial crisis. And the worst of the great financial crisis happened around the month of October. And so some people are saying, are we going to be seeing another Black October, given what is going on in the Middle East, and also given what is happening in stock markets around the world, with people saying it's time for risk off. The point is, we will get over this. Let's say we do get a stock market downturn in October. we will get over this. And so if stocks were to fall, I think, one of the best things that we can do is to step in and just start buying. Because we are actually looking for the long term. And going back to what we said at the beginning of the show, the earnings season hasn't really been that bad. The banks have reported they were okay. And we've already mentioned two of those companies. The third one that we haven't mentioned is Procter Gamble. They have increased price. And guess what? They've also increased sales. So revenues have increased, profits have increased. And they're even talking about if inflation were to persist, they would actually have to increase prices some more. And it looks as though increasing prices hasn't really damaged these kind of companies. We've had results from PepsiCo, same again. They increase prices, things are okay. We're going to be hearing from Coca-Cola later on this month, and I would think the results are going to be okay also. So I think we're just going to have to live with not higher for longer interest rates. I think we're going to have to live with higher for longer prices. And I think it's going to be a long while before prices start to come down again, Brian. And those companies that have got that pricing power are going to be the winners, regardless of what happens in October and beyond, simply because I think we're going to be living with inflation for a very, very long time, Brian.
Now, David, on a different note, you're a fan of Bursa Malaysia. You're a fan of Malaysia as a business, as an investment opportunity relative to in the region. But the ringgit has just hit a 25-year low against the US dollar. What are your thoughts on this as an investor?
Well, the first thing that came into my mind, Brian, was yikes, 25-year low against the US dollar. But it's not entirely surprising. You look at US interest rates, 5.5%. You look at interest rates over in Malaysia, 3%. I mean, there's a 2.5 percentage point difference between those two. So if you were a Malaysian and you were being paid today, what would you do with your cash? You would probably sort of take it and convert it into some other currency, something like the Singapore dollar or maybe even the US dollar, and just enjoy the slightly higher interest rates. What is Bank Negara Malaysia going to do now? I mean, they've been maintaining this a steady interest rate. They say the economy will take care of itself. And when the economy improves, then, of course, the exchange rate will start to improve also. But when you're at a 25-year low against the US dollar, and I think only the Japanese yen over here is actually faring worse than the US dollar. And the reason for the Japanese yen being so weak, interest rates again. So is the Bank Negara at the next meeting going to start thinking about increasing interest rates? I think that could be very much on the cards, Brian, because I don't think they can maintain this line where they're going to keep interest rates as low as they are in hope that it will drive the Malaysian economy, because ultimately people are very short term. And just as I gave that analogy, if you're paid today, chances are you're going to convert your Malaysian ringgit into something else in the hope that you don't lose any purchasing power from the money that you earn from your working. So it's going to be tough for Bank Negara to actually sort of maintain that line, Brian.
David, on that note, we've run out of time today. Thank you very much for your insights, and thanks for coming on the show.
You're welcome. Thank you.
Now, we've been speaking to David Kuo, founder of the Smart Investor, coming to us out of Singapore on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Please check out this interview on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.